Good day, Fabio Donetti for Winston Capital Advisors. We cover the week of September 10th to September 14th. We're going to talk about a new fund, Schroders, which we think could be very interesting. We're going to discuss, we have employment report, inflation, retail sales, what it means, what happens, what would the Fed will do 10 years after the crisis. We're going to talk about some of that. Hurricane Florence just about to finish. Apple brought new product, what it means for the stock, what it means for the industry. Emerging markets had a lot of action, and how about emerging market versus the S&P? And finally, a little bit of the China talks and what is coming this week. So let's start with the first one. Thursday, 4 p.m., we're going to have a presentation by Schroders. Many of you have asked me about the ability to invest in Argentina from abroad. You know, local rates are 60%. There are many instruments with serious yield. Obviously, you take currency risk, but some people might like the idea. And Schroders announced that they're coming with a local bond fund for Argentina. So we'll have the portfolio managers Thursday at 4 p.m. We had like employment, inflation, retail sales. Let's go a little bit about that. Employment came very good, 200,000, you know, kind of what the market expected. However, average wages went up. The market was expecting just a growth of 2.7% on average hourly wages, but however went up to 2.9%. So that was a little bit of a pressure there. However, the next week, the inflation numbers came very, very mild, actually lower than expected, both the PPI, both the CPI, both in the core, and especially in CPI, very low in clothing, very low in healthcare, which was sort of a surprise, less on education, which is not. So clearly less of an inflation there, but then we have retail sales that were very strong. They came very good although they reviewed the numbers down to 0.4%, the previous was very high. So what does it mean? I mean, in a way that we have an economy that is a full employment, there is some pressure in wages, you see that, but there is absolutely no pressure on inflation. And retail sales shows you that things are going well. So the view is like, our view is like, Jerome Powell at the Fed will keep steady raising rates. They're going to stop, end of September, somewhere in December, another half a point. We're going to go to 2, I think it's 2.25, 2.5 in rates. And because of that, I think that the 10-year is not going to go anywhere. The 10-year hover around 3%, went to a little bit here and there. But I think that we're going to have a very flat yield curve, and probably at some point next year, we might invert and discount a little bit of a recession into the mix. Early to say, but all these numbers keep supporting, a steady growing economy with very little inflation, and a Fed that on this environment is very willing to normalize rates and keep steady on its job. We have 10 years of the crisis, a lot of writing. We were there about, the demise of Lehman Brothers, Fannie, Freddie, and everything. And the main conclusion is, remember, it will happen again. Why? Because the capitalist system is based on that. It's based on borrowing today to produce, I'll give you the money tomorrow. So someone has to be willing to give me the money today, not getting it to use, so someone else can borrow, produce, and pay back. At some point, some days, these things do not work out, you cannot pay back, and that's when you have a crisis. And that's how the system is, and that was the main criticism of other systems like communism and others, that the system was inherently not stable, which is true. However, on the long run, it has created the most amount of wealth and creation and new things in the world and all that. So the point is like, be on the lookout. That's what we do for a living, because these crises will repeat themselves, and they always come in the hand of excess leverage, a very rosy view of the world, and then someone drops the shoe. So again, the whole reflection is good, great, but it will happen again for sure. I think the role of the central banks have been very reinforced over these last 10 years. They came to the rescue, pumped the money, they were credible, there was not inflation numbers, the currencies stabilized. So I think if anything, we came stronger after this crisis because we learned a lot of lessons, but that doesn't mean that we're not going to have it again. It will be different, but the more tools we have, the better we are. That's kind of my view. Hurricane Florence is still kind of going around. It's now a tropical storm hitting the Carolinas. I have not seen yet estimate of damages. So looking into that, I haven't seen anything so far. And thankfully, the human tragedy seems to be very, very small. But again, they still talk about catastrophic economic losses for some areas. So we'll probably get more color in the next few days. Apple, last week, 3 new phones, a new watch, a lot of work to do. We're waiting for the reviews. We're waiting to see what happens. Do not get mistakenly, followed by the negative reviews or the company is done, has lost creativity. Because for the last 2 years, every time someone said that, was only to be disappointed. Stock is up 41% year to date. Remember, it's a $1 trillion company, and for the most part, they know what they're doing. Someday, they might run a full and they might not be as good as they used to be. Not saying that it's not going to happen, but for now, they seem that they do. So let's see what happens. Let's see what the reviews are, and do not get carried on by rumors that, oh, the phone is not selling or the watch is not selling, because every time we thought about that, we were wrong. Emerging market was very busy last week, a lot of volatility, a lot of ups and downs. And finally, towards the end of the week, it started to find some good footing, especially in the Far East. There was a lot of correction on the currencies and all that, and equities as well. So finally got there. Latin America still was a little bit weaker, especially in the FX, Argentina and Brazil. However, the equities were up and the bonds were up in those two countries. So my view is like, I like it there. I think that this crisis is kind of overblown. It's gone. It was higher dollar, higher rates. Yes, they suffer, but I don't think anybody's going to have a default or a major disaster. So long EEM, I think is a good idea. The ETF on emerging markets versus probably the SPY. We like Argentina. We're going to put the 100-year bond in a model portfolio. We think that they're going to find some stability and some work out there. And also, remember, we have a position in Mexico, EWW, that we like. And maybe you should look into Brazil as well. EWC was very punished, that market. And despite the uncertainty on the elections, which still in November, I think the value might help that market recover. So just take a look at that. China talks, I think there's a lot of investor fatigue. People are a little bit tired of this whole thing. However, it seems that we have renewed talks, started on Friday. We'll see what happens. Bloomberg had a negative comment today. Now it's like Sunday at noon, saying that the Chinese are less willing to commit, but we don't know. We'll have to wait and see what's the story. Finally, what's coming next week? Not a lot. However, tomorrow, Oracle and Federal Express will report earnings. They have different calendar fiscal, but it's good because both Oracle and FedEx will be a good barometer, at least to start smelling how the earnings for the third quarter will come next month. So look into that. And also on Thursday, we will have Micron, punished stock, but also maybe a little bit of a smell of how the semiconductor industry is doing. That's all we have. Remember, Thursday, 4 p.m., Schroders discussing the Argentina bond fund. And also for our subscribers, remember, every day, 9:45, talking about the markets. More information, like always, at our webpage, winston.capital, or in our YouTube channel, Fabian Onetti. Have a great one.